Morning, it's 20th of April, it's 8:10 in the UK, 8:09 in the UK. Just want to get cracking and show you this. Hang on, I'm just going to move this down a bit. There we go, move my screen down. That's better. Right, Euro yen. We've been trading sideways for 2 weeks. Been driving me nuts, this sideways movement. On the hourly chart, you can see the moving average is completely flattened out. Right, finally, we've got a break. So this should be quite significant. We've beaten the trend line at 130.71, 130.70. So this should now indicate that the market's going to go. We're already in a bull trend anyway. So this is just one massive consolidation phase, and we should now take off. There you can see from the daily chart on the top there. On the daily chart top there, you can see we've been moving higher since at least October. We're in a multi-month bull trend. I've left that fib on there at 130.66, which shows where the previous highs were, 130.66.70. We're now pushing up above 130.90. So if we get anywhere back near 130.70, 130.60 for a retest, that should be an opportunity to jump into a long position. Where can we get to? We've got trend line, important trend line going back to the beginning of last year, and that target takes us up to 131.40. Yeah, 131.40. So that would be the main resistance. If we can hit that this week, looks like we probably will. I'm kind of expecting that to happen. So 130.40, 130.50 is the big resistance for the week, and it looks like we're going to head up to there now. Aussie yen is breaking above what should have been strong resistance. Well, it was strong resistance, the 500 week moving average at 84.40. Breaking up through there now. You can see for the last 3 weeks, 4 weeks, the market has held that after dipping back below it. So I think this is significant. Up through 84.40 is very bullish for today. You can see that we've broken above previous highs. I really want to show you my 4-hour chart here. Actually, we just whiz that over. There we go. There's your trend line that we've broken. The trend line is at 84. Oh, again, 84.40. So that's bang on the resistance that we were seeing from the 500 week moving average. This is really positive. Already we're now 25 points above, pips above here. If we get anywhere back near 84.40, then that should be really good support level. 84.45, 84.35, stop below 84.25. I don't know if we're going to retest that level. This really does look very positive indeed. Seeing some real yen weakness. Where can we get to? Well, we can certainly retest 85.44. I don't really know why the market topped there. So although that's our first target and it's nearly, well, it's 100 pips higher from the breakout point, I wouldn't be surprised to see us break above it. It is quite a negative candle on the weekly chart, so we've got to watch that level. But looking back, I can't see any reason why the market topped there. So maybe this time around we'll sell through it. We clearly are in a pretty strong bull trend. Just as we are in the euro yen. We've been going up for over a year, so all looks good for the bulls. The gold's had a good run, but we're now struggling at this trend line going, which goes back a long way, back to middle of 2018. So this is a good 3-year trend line at around 1781. We managed to get up as far as 1789, but we're dipping back below it now. So bit of a struggle for gold. These bulls are just having a tough time. Great week last week for gold, and now a pullback. Minor negative candle yesterday with the spike higher and the red body. So it does look like we're going to have a correction. We do have some support on the short term at, you can see from the trend line there we have some support, and it's the same on the short term chart. 1764, 1762, that's the big support level of the day for gold. If we hold that, then the bulls are still in with a chance. We start breaking below 1760, 1758, that's going to be a problem. We'll see 1752, we might see 1740, we might see the mid 1740 area, but this really is the key support level for me today, 1764, 1762. Right, US dollar, which I had thought would have a real good move higher this year, and we were doing that until this month. We've dipped all the way back to the 500 week moving average at 1990. Now that has held, or it has held so far as I speak to you. I think that is pretty key. I know it didn't have much of an effect here, to be fair. We were flipping backwards and forwards above it, and it didn't do an awful lot. We've got a good trend line down here at 90.65 as well. Not overbought on the weekly chart, but oversold, but we're very oversold on the daily chart as we test the 100-day moving average at 91.02. Now again, we've overrun that by over 10 pips, not massive on the downside, and we do have that 61.8% fib at 90.82, so we have held that at least I just think these bulls have got to regroup around here. It's a decent enough support level. We've had such a drop. If they can get their act together and the bulls can now step in and use this support level, then we can really start to build a bull trend. But so what I'm trying to say to you is this is absolutely key right now. We really are at the only support level that is left in the dollar index. If this doesn't hold, the bulls might as well just forget about it. They're finished. We'll probably retest the previous lows. We'll probably break them. So we'll see what happens. But I think, bearing in mind how oversold we are, this is a chance now for the bulls to really get hold of the dollar. So we could see a strong bounce from here. Having said that, the euro looks quite strong. So this doesn't really help my theory of a stronger dollar. We've beaten the 100-day moving average, which is at 120.58. We're well through there. We're at least 10 pips above that. Heading towards the 61.8% fib at 120.99. So what would I need to see today? I would need to see a negative candle on the euro to make me believe that the dollar has reversed. I would need to see something like a shooting star. Bearish engulfing candle is not going to happen today, but something like a shooting star where we push up and then sellers come in and then we close below the 100-day moving average, maybe with a small blue body or even a red body candle. That would say to me, okay, now it is worth jumping into a short position. But right now, I must admit, shorts look too risky. The bulls do look well in control of this market. And if we hold above 120, 55, 60, it looks like we can push on to at least 121.00. Then you've got this trend line sort of resistance intersecting at 121.30. So 121.00, 121.30 would be the targets if we do keep going up. Cables had a terrific run off the 100-day moving average support. I talked about that support in my reports. It's really worked. We've rocketed up. We had one resistance at 138.00, 138.10. That worked for a while. Once we got through there on Friday, that's pushed up with massive follow through yesterday, of course. Now we've got a trend line up here at 140.20, 140.30. Pretty significant. It goes back to the beginning of November. You can see it held perfectly when it was tested at the beginning of the month. Now we're heading towards the middle or towards the end of the month. We've got to watch what happens at 140.20, 140.30. Not significantly overbought yet, even though we've had a good run up. We are overbought on the short-term charts, of course, after 2 or 3 days of significant gains. So that is the key resistance for the day today. Let's just have a quick look at the weekly chart in case I'm missing anything. No, that all looks okay. Previous highs up here around 140.00, 140.16. Okay, so we really do have a lot of resistance from sort of 140.15 up to 140.30. That will be key for cable today. I found the Forex markets really difficult over the last week to 10 days. Lots of sideways action. I've shown you some breakouts today, but there's so much just going sideways that I'm going to move on to some stock markets now. Nasdaq. 14,000. I've been talking about 14,000 being a big psychological resistance level for quite a long time. It definitely has been. Every time we get near there, we back off. Now we have the potential of a head and shoulders pattern. Not a huge one. We're only talking about a sort of 200 point, 200 point head and shoulders pattern. What I mean by 200 point head and shoulders pattern is the peak of the head to the right shoulder is about 200 points. So if we start breaking below 13, well, their neckline is bang on 13,830. So we start breaking below 13,830, that indicates that the head and shoulders pattern has completed. You can see the left shoulder of the head and a small right shoulder, which is holding the 100-hour moving average just below there actually, which is at 13,950. So we start breaking below 13,830, 13,820. That would indicate that the head and shoulders pattern has completed, and we could drop another 200 points from there. So we could be looking at sort of 13,650, 13,600 as the first target. I'm not talking about a crash in the stock markets yet, even though I think they're ridiculously overbought. And we are seeing higher inflation, and we all know about that, potentially higher bond yields, but still selling into a stock market, a bullish, a strong bull trend like this and just praying that the market dumps is not a very clever trading strategy. S&P also seems to be running into some resistance. We have a trend line going back to November. We did look like we'd broken above it. We'd closed the week above it yesterday, but then, on Friday. And then yesterday on Monday, we started to sink back towards it. Now, 40, I've got the trend line bang on 41.57. So we are sitting just above it at the moment as I speak to you. We're at 41.62. But it just feels like the market's fading. It's not roaring away on the breakout. You know, having broken out and closed the week above it, we really should have seen a big blue candle yesterday, and we didn't. We saw the market come back, test it, dip below it. Look how overbought we are, you know, and the stochastics are starting to turn negative now, or turn lower, I should say, not negative. 85. I've got 80 as the line. Break below 80 would indicate maybe we're starting to build some momentum to the downside. We don't have a negative pattern, so I can't start talking about short position in the S&P. That would be silly, but I do need to warn you that maybe we are struggling and maybe we will see a bit of a correction. Not something we see often in these stock markets, but you know, these little pullbacks. What was the last one? We got from 39.59 down to 37.20. Okay, so significant enough. We're talking about almost 150 pip on a correction, 150 ticks, points, whatever, on a correction. So it could happen. We could dip to this lower trend line. Who knows? Just wanted to make you aware of that. This video is going straight out to my subscribers now, 8:25 in the morning on Tuesday. If you are not a subscriber, please go and have a look at my website, daytradeideas.co.uk, where you'll find information about the products, the service that we offer, the daily technical analysis. I've got an online training course. There's lots of information on there, and you can, let me close that, scroll down, see all the products that we offer. Daily technical analysis released every morning by 7 o'clock at the latest. And please do contact me if you need me on Twitter at DayTradeSignals.